We called it, and the commodities followed. From oil's plunge to silver's collapse, from gold's stumble to copper's nosedive, this week was stacked with spot-on forecasts. Welcome to Commodities with Investing Angles, weekly update, where each candle speaks volumes and Elliott Waves reveal the path before the market reacts. We'll break down monthly and quarterly closures across major commodities, including oil, silver, gold, copper, uranium, coffee, palladium, and natural gas, the only one still flashing bullish shines. Are you riding the trend or catching headlines late? Stick around as we decode Candlestick and map the setups most traders miss. Smash that like, tap the bell, subscribe, and share this video with your trading circles. For in-depth charts and multi-time frame Elliott Waves analysis, visit investingangles.com. And we begin with silver. This was the chart that we shared on April the 2nd with our subscribers. SLV Silver Trust. This was our call on April 2nd when the SLV was 30.74. And this was exactly what happened. After that call, SLV dropped 12.3% in just 2 days. Well, and this is the chart that we are talking about. I'm hearing lots of services that, oh, we called it again, we called it as well, and we did it too. But just to paraphrase Cuba Gooding's Show Me the Money, I always say, show me the chart. And here's the chart that we shared on April 2nd, clearly outlining the next path. So now let's move on to the next one. So as you can see, by the way, so this SLV hit the target perfectly, a little earlier than we anticipated, but nevertheless, target is the target. So far, it's a lucky pass for ABC, but I would say if it moves lower, and there are chances for it, then we would treat this as wave 3 of a much bigger correction. And now let's move on to silver itself. So what we are seeing here is the daily closure, daily, weekly, and 10-day frames. The daily closure is plain bearish, and as you can see, with silver went through the 50, 100, and 200 days moving average, making an 8x20 EMA bearish cross. And on the weekly frame, it formed a strong tower top formation with a bearish engulfing in it. So the chances for moving lower are significant. The next escalation would be the 10-day frame, which is closing on Tuesday. And if silver doesn't make any reversal here, and I'm talking about potential move of about 11% in the next 2 days, then the closure will be bearish here. And this is another call that we made just a few days ago, saying that silver formed a double top, and there is a good chance to go for double distance for this. So far, silver did. Now let's move on to the Elliott Wave chart for silver. This is the bigger perspective. As we were talking previously for several months, that silver still has 2 chances here. Complete wave in the red color in this rectangle, or start wave in the blue color immediately. So far, the wave down looks impulsive, and this is a big concern. So this is a possibility that silver completed an ABC here for wave B, and it might be starting wave C of 2. Let's have a look at the smaller frames here. This is the one that we've been monitoring for a long time. What we are seeing here, again, this was our prediction on March 28 when we said that this wave is about to reverse, potentially after forming an ending diagonal, expanding ending diagonal as marked here in red lines, without crossing this particular level, 34.863. So far, we see a plunge here, and if silver breaks through 29.707, it will be technically a confirmation, most likely a huge double top and a reversal, most likely following the red path with these targets. And if we look at the smaller frame, there is a possibility of an opening leading diagonal for wave 1, wave 2, and the impulsive wave 3 very clean. Whether it's complete or not, it's not clear yet. We don't have very strong technical support for either of the paths. That's why I put a few of them here. I would say that purple, either purple or the blue one, they are most likely right now, but still we need a confirmation. I cannot reject the possibility of silver moving immediately lower, extending this impulse. Well, that's silver. That's not a pretty picture. Now let's have a look at gold. And I have this somewhat gloomy picture. Perhaps it is saying what you should expect. This is the daily frame. Speaking about it, it's a strong confirmation of a dark cloud cover on the daily frame. It's a tower top on the 2-day frame, and it's a dark cloud cover on the weekly frame at once. That's quite a powerful message, and if you see a confirmation of the weekly candle next week, this would be a serious message, possibly a serious reversal. And as we discussed previously at the end of March with our subscribers, we were saying that gold was strongly oversold across all frames up to the yearly, up to the annual, and technically the conditions right now remind these five tops that gold made previously: 1980, 2006, 2008, 2011, and 2020. And the average drop after these tops were about 33%. That's why we put this chart here, and we are tracking it right now. So on average, it will be drop of to 2100. The lucky path would be 2400, and the unfortunate one is 1600. Well, let's see how gold develops here. So far, there is a big concern about being stretched technically. Speaking about the bigger frame, the wave that started in February 4th, we were talking about multiple times that this wave is likely an non-overlapping ending diagonal for multiple reasons, and this is potentially the top being formed for the futures. And if this is indeed a diagonal, we should see a very sharp and brutal move towards this level, 2541. Speaking about this bigger frame that started in March, this was the smaller frame part, it started in March. This wave also looks like a diagonal for multiple reasons, and if it is indeed so, we will see a strong break. This would be our first target, 2832. So far, gold formed an impulse down, a corrective wave 2, and most likely it is right now in the middle of wave 3 with an approximate target of 2952. However, it could be stronger. And speaking about the GOD trust, it confirmed a top on the daily frame and confirmed a top on the 2-day frame, forming technically a dark cloud cover on the weekly frame. So very similar to what silver and silver futures did. So if we see a confirmation next week, it would be a big deal. So now let's talk now about the other, and let's move to oil. Oil formed very strong closure here on the daily frame and the 2-day frame. we are seeing a strong continuation candle, strong reversal confirmation, and the weekly frame was just as we expected. A strong red candle followed by 3 failures to overcome it, and another one, a failure to close above this red candle, and now it is closing below the 64.995, the level which we expected a week ago. If we look at the larger frame, the 10-day frame is going to close on Tuesday, and oil needs about 7% in the next 2 days in order to mitigate this potential. However, we don't see it happening at this point. Now let's have a look at the chart. We have made some updates on it, and this was the chart that we shared with our subscribers on April 2nd, saying that this flag is complete and oil was $70.21 at this moment. Right now, as we are talking, oil is sitting at 61.92. Well, so far I made a modification. I think that this could potentially be wave 1, wave 2, and we would be looking for wave 3 somewhere between 55 and 48.60. If oil completes this, then we would be looking for an even bigger impulse, 4 and 5. Waves 4 and 5. So far, if you're interested in the bigger chart, in the bigger picture, we posted it yesterday at investingangles.com with plenty of explanations. And now let's have a look at the microwave, what is happening right now. Oil is plunging in an impulsive manner, and right now potentially already formed an impulse. If it is the case, we should see some corrective action for either zigzag or flat. So far it is on track, but I would like to emphasize that a possibility for a continued move down extending this wave is on the table too. And this is our call on Brent. We were discussing it at the beginning of March, I believe. Yes, at the beginning of March, we said that there are technical similarities between year 2020 and year 2025, and there is a good chance that we are seeing acceleration. So it took 3 weeks to postpone it, and right now we have a strong candle. By the way, if this candle is very similar to this one, which happened on February 24th of 2020, year 2020, and the next candle was a 30% loss in 1 week. So this is still a possibility. Let's see what happens next. And I think the last one is a quick look at what's happening with energy powers, ExxonMobil, Chevron, and ConocoPhillips. We are seeing strong bearish moves, tower top, bearish engulfing, and for Chevron and for Conoco. Conoco, by the way, formed a very beautiful advanced block and now have a confirmation of this one. So the chances for a move lower next week are very significant. So after that, let's move on to the next energy, natural gas. What we see here, it's interesting. So far, the daily and I have this 2-day candles, they formed bearish candles. However, the daily is still sitting on the support, 50 days moving average, and a very interesting one, that the weekly one failed to close as a bearish engulfing. It was pushed up at the closing hours, and it formed only a dark cloud cover, which is less bearish compared to the bearish engulfing. So this could be a big deal. Let's see how it plays. And so far, this formation remains bullish because of this candle. this candle is bullish. I mean, this one, the big one, and it hasn't been negated yet. So there are 4 attempts, 4 failures. Technically, natural gas is bullish on the weekly frame and on the monthly frame. Monthly closure was also bullish. If it continues like this, and if this weekly candle is negated and there are chances for it, I would say that natural gas has a bright future. And this is our chart for the natural gas. That's something that we were talking about previously. I don't have this chart, the previous one here. So this is potentially a leading diagonal for wave 1 and the expected return to the almost to the origin of it, 3.827. And if this level is held here, gas has a very bright future. It can move towards 4.7, 4.95, or even higher. The key here is to keep this 3.827 level. A break below it, it will invalidate this count and maybe even the bigger one. The bigger charts we discussed with our subscribers, investingangles.com. Both oil and gas are part of the same energy package together with uranium. Now let's move on to another energy, internal energy, coffee. So what we said just a week ago, that coffee is set for a decline, and this is exactly what's happening right now. The 3-day frame closed with strong bearish candle. The weekly frame also bearish, confirming the reversal here, and also forming a record MACD cross, bearish MACD cross, with a potential target of 259, just a statistical estimate here. Speaking about the monthly frame, I mentioned that unless coffee rallies really hard, like 15% or so in the last couple of days, it will close with a bearish candle. So far we are seeing a bearish candle, clear inside candle, and potentially a spinning top. And the next frame to watch would be the 10-day frame. Here's something for you to discuss or to watch on Tuesday. If coffee closes on Tuesday with below 359.90, it will be a confirmation of a bigger top and a very good chance that coffee will continue to decline. And this is the chart that we shared with our subscribers earlier at the end of March, saying that coffee has this potential to move down because of this. This wave is not an impulsive wave. Most likely it's an ending diagonal, a huge one, and with a potential return to 142.73 in one way or 3 ways. It depends. We'll see how it works. Now let's move on to the next one, is Palladium. What we are seeing here is our chart that we shared on February 8th, saying that Palladium potentially completed a bearish flag, and so far the metal moves down. In our previous update, I discussed the possibility of either a straight impulse downward, which would be wave 3 here, or morphing it into an ending diagonal, potentially somewhere here. And this was based on multiple candles that we were looking for. The daily is clearly bearish. The weekly formed a very clean falling 3 methods, and the move on the weekly downward is almost guaranteed. The monthly failed to close with a bullish candle and right now is looking for something downward. The same thing will happen with the 8-day frame. It's a falling 3 methods here, very clean. However, we still need to wait 5 days until Thursday to see how this formation closes. If it closes below the low of this green candle, expect a continued move down, perhaps an acceleration. So now let's move on to the next one that we discussed. This is our call on copper. This is the chart that we shared with our subscribers on April 2nd when copper was 504, and it was very entertaining to see other services calling copper for a rally upward. So what happened here is that after this call, copper lost in just a mere 2 days over 13%, and the chances for moving lower are significant. Everything is very simple. This wave here for copper is an ending diagonal, and it is likely complete. And right now we would be looking for this move, and this would be a best case scenario. Copper to fall towards 3.1315, 42% of the top. And as because this wave, and as soon as copper hits this wave, I would say that this one, the worst case scenario, would open as well. Copper to 1.9355, which is also an ending diagonal, but of a bigger scale here. So this is another ending diagonal. Well, that's the perspective for the metal. And now, oh, yeah, this is a short-term perspective for copper that I started to chart. So far, the wave of the top has been clearly impulsive. And this is wave 1, wave 2, wave 3 is still developing. I think it's gonna be somewhere towards 4.14, 4.0, this target. Then we would see wave 4 and another wave 5 downward. That's the perspective for the short term. And the final discussion of today's commodities is uranium. Speaking about global uranium ETF, nothing surprising happening here. As we discussed previously, the monthly closure was bearish, forming an 8x20 EMA bearish cross. And if we look at the quarterly closure, it's also formed a bearish candle. Speaking about the weekly formed a strong bearish continuation. The same for the 2-day frame. So technically nothing bullish in the picture. Expect lower prices. If we look at the energy fuels, it also formed a very strong bearish continuation candle on the quarterly frame. The monthly is also bearish continuation, breaking below the 100 months moving average, which is a fairly rare signal. The weekly closed with a bearish continuation, and the daily also bearish. Daily became oversold, so we might see a bounce here. However, I wouldn't say it has a good chance to form a strong rally. If we look at this chart, this is the flag that we called in the middle of March, bearish flag. So far, it has been executed beautifully, and since the call, energy fuels or quad U lost almost 17% in just 3 weeks. That's a wonderful call, and at this point I'm not sure whether the bottom has been formed. The target is broader at this moment. Speaking about the bigger chart, this is the call that we made on December 19, 2023, and this was the original chart. That's the call. So far, energy fuels lost over 55% of its value. hitting the middle point of this our target and moving towards 233, which is our next target. So far, we are not seeing a reversal pattern here. Once we do, you'll probably get it first. Now let's move to the CCJ, or Chemical Corporation. We can see that the 3-day moved below the 200 periods moving average. The weekly closure is a bearish continuation, technically confirming a reversal here. The monthly closure was strong bearish, and the quarterly formed a very strong bearish engulfing, signaling a continued ride for at least one quarter. If we look at the Elliott waves, this is the chart that we discussed earlier in March, saying that there is a good chance for chemical to move lower, and this is what it does. And the longer term frame, this is the perspective. I think we called it much earlier. Yes, in February 17, we formed this log scale chart. This is the perspective, 34 to 17. Well, that looks brutal right now, but let's see what kind of wave it forms and what would be the next moves. So, from oil's drop to copper's confirmation, from silver's textbook to reversal to uranium's collapse, this week was proof that precision analysis beats the noise. And if you've been tracking natural gas, stay alert. Bullish whispers are still on the table. So what's your top commodity setup this week? Drop it in the comments. Let's trade ideas. And huge thanks to our 12,000 plus subscribers. Your support drives every chart we draw and every wave we count. Ready for daily setups and exclusive insights? Join us at investingangles.com and get the edge before the next turn. Until the next time, stay sharp, stay objective, and remember, at Investing Angles, we chart the turn before the herd even blinks.